Hey, good afternoon, guys. Just wanted to bring you a quick what's ahead of us as we look into the next week. And welcome to the Live Traders news channel. Let's take a look at the spiders here. I wanted to start with the spiders, and then I want to work my way back to the Qs here. So let's take a look at the spiders. I mean, obviously, looking at the spiders, you can see the bears had another opportunity to push it down, but so far no follow through, and here we are stuck in a range again. However, action in many stocks beginning to deteriorate. So far, even in a range-bound market, there are pockets of strength in individual stocks, but last week or so was pretty much everything was shown. They're tired. They're tired, and when we have deterioration in price action, the prices tend to go lower. Hit and run strategy worked pretty well, and as long as you understood your risk tolerance, you understood what the market environment was, eh, you had a good day. You had a good week. You had a good day. As long as in this boring and tiresome range-bound market you can control yourself, then you can be successful. And if you're struggling, I highly recommend go check out www.livetraders.com. Download our free ebook. You would really, really love it. I have nothing but compliments about how much some traders have learned from a free ebooks than what they have learned from another resources that they've purchased for hundreds of dollars, and that is no shot at anybody else. It's just the confidence in what we're providing to all the traders. So let's obviously when you look at the spiders, it's kind of vegging right here. It can break down, it can break out. That's where we're standing here. Hourly charts also in a downtrend, but nonetheless we're in a range bound market and bottoming tail, bottoming tail, bottoming tail. But what you can see is how selling volume is greater than the buying volume, which makes a big, big difference in the market. IWM, IWM, same thing here. Same thing, but IWM is a little different. IWM break this area, it's going to see 120, which also is a support level on the weekly chart. Now 120 gets taken out, you're going to see 200-day moving average fairly quickly. What I like to do is if the market comes into this demand area and then take out this next rally that fails, that I like to short the market break of this again and then hold it into this area. I will be aggressively shorting the market. Now, one area where I'm interested is gold. Gold at 200-day moving average put a nice bottoming tail. That's a nice tail right at the 50-period moving average on the weekly chart. But when I told my traders that gold broke a very significant macro trend line, so it's important to understand the difference between micro and a macro trend line. So when the gold broke the very significant macro trend line, this happens. Every time you break this significant trend line, this seems to happen. However, it it's we got here fairly quickly, and I think gold might be ready for a bounce, which makes me come to this GDX. If GDX can get over 24, I think you can get 26 pretty quickly. This is kind of a hit and run trade, but you also have to understand that this is predicated upon how the gold market trades, and the gold market trades overnight, so you can have overnight gap ups and overnight gap down. None of the sectors are showing any strength. Look at the IBB breaking down, materials already broke down, energy somewhat strength, and financials, the two sectors. So two sectors are showing little signs of life. Utilities just can't get out of its way. Healthcare can't get out of its way. And then right here, consumer discretions. Now, when you look at the retail sector here, I thought a retail sector is bouncing off the 200-day moving average on the weekly chart, but this is very tough, and none of the retail names are showing any signs of bottoming or any signs of strength. JWN, take a look. JWN looks actually pretty good. JWN looks good, and the Macy's, I think Macy's may have some room to move higher. So take a look at this. Macy's, JWN, and TIFF. They are looking pretty decent here. One of the, I like Apple here on the weekly chart is flagging. I think Apple has room to move higher. Other than that, momentum stocks like Tesla, they're breaking down and looks like a much lower. Just want to bring you a quick video. Hope you guys have a great week. Check us out at www.livetraders.com.